Everyone says artificial intelligence will transform productivity. But here's the surprise. America's productivity has already been rising sharply even before AI has had its biggest impact. Meanwhile, much of Europe has struggled to keep pace. So why is the US pulling ahead? But first, what is productivity? Productivity measures how much a worker produces in every hour of work. If companies can produce more without hiring more people or increasing working hours, productivity rises. And over the past few years, that's exactly what's been happening in the US. Jerome Powell recently said the US has seen several years of unusually strong productivity growth and that the full impact of generative AI is still to come. Economists say it's a combination of factors. Businesses have spent years digitizing their operations. Restaurants now manage inventories using cloud-based systems. Hospitals have moved patient records online. Companies have automated routine processes and adopted better software across industries. Remote work has also widened the talent pool, allowing firms to hire the right people regardless of location. Another important reason is the labor market. US unemployment has remained at or below 4.5% since October 2021, the longest such stretch since the 1960s. With workers becoming harder to find, companies had a stronger incentive to become more efficient instead of simply hiring more people. That shift is visible across industries. Tech employment has fallen for 18 consecutive months, while the finance sector has shed more than 100,000 jobs since peaking in 2025. Yet, many companies continue to produce more. The oil industry tells a similar story. Around 2013, it employed about 200,000 people. Today, that number is closer to 115,000. Yet, improvements in drilling technology have increased both output and profits per worker. Is AI driving all this? Not necessarily. Economists say it's still too early to credit AI for the productivity surge. Researchers at Yale Budget Lab say they have found no clear evidence linking AI adoption to broad changes in employment. Even Jerome Powell has suggested that AI's biggest economic impact is likely to come later. In other words, America's productivity boom appears to have begun before AI became mainstream. AI may strengthen that trend, but it didn't start it. Productivity is one of the biggest drivers of long-term economic growth. It allows companies to produce more, keep businesses competitive, and can support higher wages over time. The growing gap between the US and Europe suggests that technology adoption, digital transformation, and business investments may already be giving the American economy an important advantage. And if AI delivers the gains many expect, that gap could widen even further. Follow Business Standard for more such stories.